All right.
If you look at those 12 countries that we mentioned, the cost of transaction in the primary market, I think Nigeria has done a bit quite well. SEC has done a lot of work, NS has supported, but in the secondary market, it's still high, right? And there is no how we can say we want to create liquidity without looking at velocity. Velocity is actually what brings about the liquidity. So, and that's why we, as a Morgan Capital, we've lowered our brokerage fees to 0.25%, and our state, it's not going to go up again, right? So what we are saying is that, look, if we can get this quite very low, there'll be a lot of velocity, which is what creates liquidity. Then issuers would tend to now come to issue new instruments, new products, which are the work of investment bankers to do, and that will be from the operators putting in their own into the program. Then the issuers and the government must also work and give incentives. It's some subtle question, if possible. I'll say subtle question. If, for instance, government were to say, okay, there's a new licensing round for telecoms, I just put it in the licensing document that, look, once you reach 1 million subscriber base, you must be listed on the Nigerian Stock Exchange.
But you see, now we have a situation coming up on our hands. Tomorrow, the companies, the privatization will be complete on the handing over of the power companies. So, is nobody knows if such a clause is actually attached in their agreement. And like I had this argument with you some time ago, and you actually said that that's what they should be doing now to prevent something like this from happening. What happened with the telecommunications company and some of this oil and gas companies from listing on the exchange. So if they put such a clause now in their proposals or their agreement, we need to ensure that we have most of them coming on the floor even before they begin to rake in all the billions and decide.
Of course, that is the right thing for any economic management team to do. You cannot blame the stock exchange or the SEC for that. That has to come from the economic policy management team. That, okay, we are about unlocking 45 billion, because if you look at the power sector, the discos, I would say, is about 6 billion capital base there. If you look at the cost of each of the 11 of them, then if we were to generate up about 40,000 megawatts, right, it's like $1 million to megawatts. So 40,000 about 40 billion. So we add 40 plus 6, about $45 billion. And so
right? We're getting closer to the $1 trillion mark.
But is it really in that agreement with them that, okay, perhaps once you are currently on 200 megawatts, the guy buying maybe Sapele, and once you get from 200 and you eat 300, maybe listed on the Nigerian capital market. You see, nobody is saying you must sell your shares, but there are little things, and government must now match that with some incentives. Okay, I'm giving you 5 years tax waivers now, but if you are listing on the Nigerian capital market, you get additional 5 years tax waivers.
Do you agree with this line of argument?
There's a difference between wishful thinking and practical exposition.
Yes, so let's look at the practicalizing.
And in Nigeria, we oftentimes behave like the Americans, whereby we exhaust all the positive, all the negative things before we come back to the right thing, rather than do all the right things before going to the negative ones. If you look at, you mentioned Sapele, take Ugeli for example, and Transcorp wanting to raise money. It did a rights issue, and it got some money. Now, the question is this. If you look at the money market, who can fund? Can the Nigerian money market fund those assets? No.
No, because they're not structured to fund.
So the only person who can fund would have to be the capital market. Your pensions market is not so deep. They have to do it through the capital market. So it makes plain common sense to see how to go and approach the capital market and say, what products or what means can we create to make it easier for you? These 15 power companies will require 8 to 10
about 14 because one being 14 because one being quite complete.
14, about 8 to 10 $1 million every year to keep it running. Where is that funding going to come from? Obviously, it should be able to come from the capital market. But is there an enabling structure to allow you to do so? Maybe we can at least have some hope, whereby Forte mentioned to the capital market that they will be bringing in a Geregu one into the mix. If they bring it into the market mix, it may be made from what we call those showcase transactions that enable people to see.
Like a flagship.
Yeah, like a flagship that enable people to see how it works. Look, we must understand one thing, that this thing would have to move. We have to go through paces. The challenge we, however, have is that those building blocks to achieve those goals require consensus from, like I said, capital market policies and fiscal policies, which for some reasons we've been talking about for about 2 years now.
Now, going back to numbers and facts, you talked about the fact that we have, most of these companies, especially the oil and gas, agriculture, and the rest of it, listed on the Nigerian Stock Exchange. And we know that the federal government's drive to harness the agricultural potentials in the agricultural sector and diversify away from oil is like its key focus right now. Now, with the coming on board of the commodities exchange and the rest of it, won't we see companies moving away from listing on the Nigerian Stock Exchange to this, and wouldn't this reduce the amount of capitalization or the rest of it?
No, there are two different things.
Okay.
When you have a commodities exchange, you are trading with commodities themselves.
All right.
Cocoa, soya, beans.
Okay, not their value.
Then, but on the stock exchange, that's why you have the company themselves. And in some instances, you could also have some of these commodities that are also like a subsidiary. So some of these commodities exchange can actually be a subsidiary of the stock exchange, right? So commodities market is quite different. It's like FX market, right? Which is quite different from the stock market.
Okay.
So the stock market, we're talking about the value of the company and also debt stock that are there.
Okay. Now, Femi, I'm going to ask you this one to answer for us. Some feel that the hot money syndrome might affect the $1 trillion plan. Do you share this view?
One word, not at all.
And why not?
In the first place, the whole target was getting foreign investors in the Nigerian capital market. It's a different argument from the interplay of hot money. If you look into the interplay of hot money, we had hot money. What is hot money, basically? It's a non-starter. The argument does not it does not warrant any major explanation. See, look, one must give credit to the journey we've passed through in terms of our post-financial crisis, both from the way the monetary authorities manage it, both from the way the regulators manage it, but from the way the NSE has gone about doing the work. If you look at where we're coming from, whereby we had the era of the hot money syndrome, which I dare say, given the dynamics of the Nigerian economy, it's always with us any which way. But if you have hot money, like what you had in Brazil, when people move capital into an economy because there's a fast money, there's a bubble in there, people will come in because they need to make returns and go out of it. The whole challenge, what the NSE and co have been doing, is trying to build a foundation whereby businesses are much more governed in a proper way, activities are done in a much more better way.
Transparent.
You understand? And so you would have less incidents of that. Where you find out money is whereby people come into a particular stock and move in, stay in there, and then they can get in and get out very easily. And there are different variations of it. But our capital market has come a long way. I think in spite of all what anybody may say, they should be commended.